Hello students, our subject is corporate accounting and the unit 1, that is issue and forfeiture of shares, reissue of forfeited shares, redemption of preference shares and buyback of shares. So let's start it. Here types of problems under issue of shares. So students, basically you can see here there are 24 types. See here 24 types of problems we are going to solve in our upcoming videos. So do subscribe my channel to get more benefits and more study materials which are related to your subject, that is corporate accountancy. You can see here issue of shares at par, issue of shares at premium, issue of shares at par with under subscription, issue of shares at premium with under subscriptions, issue of shares at par with call scenario. So students, I have already explained in my previous video, that is what do you mean by issue of shares at par, what is issue of shares at premium, what do you mean by under subscription, what is calls in arrear, what is calls in advance, what do you mean by over subscription. So please watch all that videos. So let's start first one, that is issue of shares at par. So issue of shares at par means what here? When the shares are issued or offered by company at their face value, that is called issue of shares at par. So the journal entries which are related to issue of shares at par are here on application, on allotment and on calls. These are like the installments: application, allotment and calls. So the first general entry which is related to application, here in this installment, company received the number of applications from the public. So the first entry is receiving entry, that is bank account debit to share application account. See here, why here bank account is debit? Because you know that very well, the rules of accounting, that is debit the receiver and credit the giver. So here company receiving the application amount, application money from the public. Because of that, here bank account, it is the debit. So bank account debit to share application account. After receiving the amount from public, company what will do? Company it transfer to capital account of company. Okay. So the next entry for transferring is share application account debit to share capital account. So these entries, two journal entries which are related to application. First one is receiving entry and second one is the transferring entry. So the next installment is the allotment. So this is the opposite of application. Allotment and calls, these both are the opposite of applications, because here first entry will be for transferring, after that receiving entries. So the first transferring entries under allotment is share allotment account debit to share capital account, and transferring and receiving entries bank account debit to share allotment account. Similarly, like on calls, here calls means maybe it first call, second call or third call, or it may be final call. Okay, so the first receiving entry is the first transferring entry is here share first call account debit to share capital account, and after that receiving entry is bank account debit to share first call account, or you can also say only to share call account. So these are the entries which are come under issue of shares at par. So let's start it. Let's see the one practical problem on which is based on issue of shares at par. See, issue of shares at par. So the first practical problem which is related to this issue of shares at par is, here ABC Limited issued prospectus inviting applications for 10,000 equity shares of rupees 100 each, payable as on application rupees 20, on allotment rupees 50, first call rupees 30. Okay, so the next applications received for 10,000 shares and allotment made accordingly. Pass the journal entries. So this is the question which is related to issue of shares at par. So see here explanation of this problem. Company here offered how much shares? See here company offered 10,000 equity shares of rupees 100 each. So company offered 10,000 shares and applications received how much? 10,000 shares. So company received the applications for 10,000 shares. So this is, we can say, full subscription. So in my previous video I have explained very briefly about the full subscription, oversubscription and undersubscription. So this problem is related to full subscription. Why it is full subscription? Because here company offered 10,000 equity shares and applications also received 10,000 shares. Because of that, this is full subscription. See the next. See here on allotment company is receiving rupees 20. On application company is receiving 20, on allotment rupees 50 and on first call rupees 30 per share. So this total will be 100 here. See here on application 20, on allotment rupees 50 and on first call rupees 30 per share. So that total will be 100, means the face value is here 100. See here 10,000 equity shares of rupees 100 each. This is the face value of share. So company is also receiving 100, means we can say that here company issued shares at par. Okay, if for example see it will be 110, then we can say here the company issued shares at premium, but here it is the 100 and the company issuing shares at par. So let's start it with the solution. Journal entries. So the first journal entry, that is the applications received entry, which one I have explained here. Applications received entry, that is bank account debit to share application account. See here bank account debit, because company is here receiver, because of that debit, and to equity share capital account, that is the 2 lakh. So the amount 2 lakh will be, see here company issued the 10,000 equity shares on application rupees 20. So just multiply this 10,000 into 20. So the amount will be 2 lakhs. Same to equity share capital account 2 lakh. Okay. The next one is after receiving company it amount transferred to capital account. So second transferring entry is equity share application account debit to equity share capital account. The amount will be same, that is 2 lakh. Clear? The narration is being share application money transferred to share capital. So the third entry is on allotment. See here on allotment I have told you opposite of this. Firstly, the share allotment account debit, that is transferring entry, and to share capital account. See here the third entry, equity share allotment account debit to equity share capital account. So the amount is 5 lakh. So the amount 5 lakh here. See here 10,000 equity shares company issued at on allotment rupees 50. So just multiply it 10,000 into 50. The amount will be here 5 lakh. So the next is received entry, that is bank account debit to equity share allotment account. The amount will be same 5 lakh 5 lakh. Okay. So the being allotment money received. The next fifth entry is on calls. See here on calls. The first one is the transferring entry, that is share first call account debit to share capital account, and next received entry bank account debit to share first call account. See the entries here. The fifth entry equity share first call account debit to equity share capital account. The amount is 3 lakh. So 10,000 company issued and first call is the 30. So multiply it 10,000 into 30. The amount will be 3 lakh. The narration is being share first call money due. Okay. And after that last one received entry is bank account debit to equity share first call account. The amount will be same 3 lakh 3 lakh. Narration is being first call money received. So this is about the journal entries. The first application, these are the two applications, these are the two allotment, and these are the two entries for the calls. So under applications the first entry is receiving, after that transferring entry. Under allotment the first call is transferring entry, and after that receiving an entry. Same here under calls, first transferring entry and last one is the receiving entry. So this is about issue of shares at par. Thank you. If any query, you can ask me in comment box. Subscribe my YouTube channel, like, share and also comment. Thank you.